Hi, this is Mark with your analysis for the week commencing the 13th of January. In recent weeks and months I've been rather busy and haven't had time to trade intraday so much, and I've been concentrating on weekly charts wherever possible, and I have shown you on multiple occasions, including last week, why I have looked to short the Aussie dollar in this area here, because this is a weekly 78.6 fib that has held going back to March time. And therefore zooming out and just trading off these longer time frames has been very profitable for me. Now what I'm going to do with this is I'm now going to move the trend line, because trend line was broken recently. The conservative trade for the week ahead is to look for a pullback to the trend line, and anywhere around 10400 I would be very interested to long. We need to be careful with this now, because eventually this of course will break. Now if you're going to trade it off a weekly, the lowest level that you go down to is a daily chart. But if we get a clear break and close above 105.80, let's be more conservative, we'll go to 10600, then I will be interested for a long. Watch the euro. The Aussie dollar and the euro are very heavily correlated, i.e. they go in the same direction at the same time, and therefore if the euro continues its run up, then yes, be interested to long on a breakout. However, as I say, the more conservative is to look for a pullback to this line, because what's been happening for the last 2-3 months, price has simply been bouncing between these two areas. Now if you were trading this intraday last week, this was initially 105, and I said look for clues to short. This is a 4-hour chart, anywhere at 105 again, and there were lots of clues here. If you took this trade and it lost, then don't beat yourself up. It was a reasonable trade to take. This was a reversal candle. We had other reversal candles. Then we had some news. Bang, off it goes. Where does it stop? Well, this is at 78.6 fib. Then we have a shooting star pattern at the top. Then we have reversal indecision candles. Finally, it turns back down again. So, as I say, going forwards, ideally you want to pull back. If you're going to trade intraday, these are the levels once again to be watching. This 105, 105.70, and also back down here this daily 55. So those are the moves to be watching, but if you want to zoom out, then watch for the trend line, and that would be the more conservative entry. This is the Euro USD on a monthly chart, and one of the members in the forum, I've forgotten the gentleman's name, for which I apologise, but he pointed out that 3 out of 4 occasions after the US elections, for example this was 2008, there have been moves of thousands of pips, a minimum of 1,000 pips. So he longed after the US elections in November, and currently he's up, if he's still in there, at 400 odd pips. So that was a break of a major trend line, stochastics, everything rolled up. That was the trade to take. What's it done? It stopped, slammed into this 55 EMA. This is the same pair on a weekly. And I was saying last week, if I was going to trade this pair, then I would be looking for a pullback down to 130, and this got to within 5 or 6 pips of my potential entry. To be honest, I didn't take this. I've been very wary with the euro lately. But the thing with the euro now is the conservative entry is once again wait for a pullback. Notice how in recent weeks and months this 55 EMA seems to be more important even than the 130. So I would look for a pullback anywhere around 130.20. This will roll over at the market open, anywhere around 130.20, 130.30. The further option is you wait for a break and close above this 200 EMA and monthly 55. So you're waiting for a break and a close, then an M2 pullback. But we then have another double top here. It's all very messy. And I say the more conservative entry is back down here, and I would be more interested at 30.30. Same pair on a 4-hour if you're going to trade this intraday. Last week when price was down here I was suggesting pullback to 130, and say I think it got down to 130.16, so it's 5 or 6 pips off my entry. Then what happened? Well, we had the news came out, bang, the price moved up, went straight through this previous area of support and resistance. The very next candle comes back down to test it. As you will know by now, that is the theory that we look for. We look for a breakout and a pullback, and therefore if you're trading intraday, look tomorrow for clues for a pullback to 13300 for a potential further continuation move. There's a British pound on a weekly, and I did catch this last week. I was saying look for a pullback to 160, because this has been doing a similar scenario for the last 5, 6, 7 weeks. These have been the areas where price has been bouncing around. Yes, we've had some nasty spikes, but it bounced back down off the weekly 200, but a more conservative entry was the 160, because it's an intersection of a trend line on a weekly chart as well as a major whole number and previous support and resistance, and this really was a no-brainer. If price is to pull back down again, then I would be looking on this trend line, and therefore I would go to 160.30 this time. The other option is you look for a break and a close above this weekly 200. I'm going to show you now on a daily chart. This then is the daily. We'd had the pin bar reversal candle the previous week. Price came down and bounced on 3 or 4 occasions down here. Then on Wednesday, prior to the news, we had this move. Now look at a 4-hour. If you look at a 4-hour chart, this was the Wednesday moves. It came down. You had 3 or 4 opportunities to take this trade, and the pound interest rate news was as expected. But and as in many cases, this moved along with the Euro USD as well. And as you can see, it stopped on that weekly 200. So conservative entry again is 160 pullback for a long, 160.20 for the reasons just explained. However, if you're going to trade it intraday, then look for a break and close above this weekly 200 EMA. So you look for a break, close, pull back with a view to a further long. 163.00 will be a logical target for this move should it develop, because it is double top and it is at monthly 55 EMA. The Swissy. And the Swissy in recent weeks, these are the lines. I've left these lines in place because what's been happening is price initially struggled here, then it came down, became support here, then it broke. So the main areas on the Swissy are here, here and here once more, and I was interested in a break back down, then a break below 9200 and a pullback. We didn't get the pullback, but if price pulls back to 9200, I will be interested to short. And this 55 rolling over and the Bollinger Band coming down as well gives me a bit more confidence. Counter trend traders, swing traders will be interested to long anywhere around 90, 80, 90, 100 because it's happened 3 or 4 occasions before. If you take that trade and only take half your normal stake because it is counter trend, you can clearly say we are in a downtrend. But I am interested to short at a pullback to 9200. If later in the week we get a break and close below here, I'd be very wary because 90 is not that far below, and that is another major area on this pair. So pullback preferred. There's a CAD on a weekly, and I showed you in recent weeks how we have a potential triangle breakout. This is a long term. This is a downtrend that goes back years. But we have now had a break and close below this area. Therefore, if you're looking for a short on the CAD, anywhere around 98.50, so you look for a break of the trend line and then a pullback to the line with a view to a short. If you're trading intraday, then again 98.50 is the area I just said, but the other one is 9900. So if you're trading intraday, watch for a pullback here. You've got a fib, you've also got the rolling over of the EMAs, major whole number, and it has been major previous support and resistance. This is the euro pound on a weekly chart, and again last week we had a pullback to this weekly trend line, and we've now had a move up. And where's it stopped? Well, it stopped to the pip on this weekly 200. So a very similar scenario to some of the other pairs. We either look for a break and close above for a continuation move, or the more conservative entry is a pullback. Now the first area is that 55 EMA. Personally, I would prefer a pullback down to 81.50. We have the trend line coming up behind it. We've got this EMA in the way. I would be more interested for a pullback to there. I go in double on this pair because it's such a small range, and therefore I try to be as conservative as possible. Now the yens. I missed these yens and spit feathers, but I was very conservative, and in fairness they're not my favourite pairs. Mary in the forum, trade spotting, has been doing extremely well, and I think she banked 250 pips just on the euro yen last week. So you are surrounded by experienced traders. Don't just rely on me and Dean and Pierre. Get yourself in the forum. I think Big Al had a good week last week as well, and these people will share their advice and their theories and why they are taking these trades. Mary is in Australia, Bondi Beach, and therefore she concentrates on the yen pairs, whereas often the yen movements are whilst I am in bed. But for me, we've now broken 89.16. We have broken the 55 EMA, although of course it's not the end of the month. We are way outside a Bollinger Band on this pair. Now for me, I need pullbacks, and the best pullback is all the way to 86, which doesn't look likely at the moment. But if we go down to a weekly chart, we have had a break and close above this monthly 55. The weekly break is here, down at the 200 EMA. So anywhere around 8600 I will be interested. If you want to be more aggressive, then you're thinking of 8750. But you might be better off checking in the forum. This is Euro Yen, similar scenario. This is on a weekly chart. We have broken the monthly. We've certainly broken and closed above the weekly. Again, have a look on the Bollinger Bands. The Bollinger Band's open, but we're outside. Once again, I need a pullback. And you either look for a pullback to the 55 EMA, or you look for a pullback all the way back down to 115, 114.50 even, because these are major moves over long periods of time. Final one, Aussie dollar yen, again way outside the Bollinger Band. 9100 was the big area here. We're now up at almost 9400, and the thing is that fundamentally there are things going on here. The new Japanese Prime Minister is deliberately trying to weaken the yen because it makes their exports cheaper, and they also have agreed to inject, i.e. print, lots and lots of extra cash, and they are deliberately weakening their currency, and the moves at the moment appear to be justifying that. So look for pullbacks. Have a look in the forum if you want to trade the yens. Personally, I continue to zoom out. Have a good week.